Hello, everyone. There are a few important things that we need to piece together in the market. I have a pretty good feeling of what's going to end up happening, but I'm going to give you guys my thought process and my reasoning for those things in today's video. And we're going to take a look at the S&P 500, the NASDAQ, the Russell is very, very interesting. We're also going to take a look at the dollar and the bonds. All right. So without further ado, let's get started with the video. All right. First things first. Let's zoom out. Let's take a broader look at the market and take things layer by layer. Okay. So right now, this is the macroeconomic news for this week. And this week is going to be very, very important. All right. So heading into Wednesdays, when the most important news is going to be, we're getting CPI data on Wednesday. Now, CPI data, basically, if that data comes in higher than expected, then what is going to happen is the Fed, basically, if inflation is higher than expected, then that is going to be good for the stock market, in my opinion, because if inflation is higher, then that would mean that the Fed, to stop that inflation going higher, would need to either pause hikes or they would need to lower hikes. So in both instances, whether they pause hikes or lower hikes, that is bullish for the stock prices, because stock market and the stocks in general, these large trillion, billion dollar companies, they have their money in basically interest is very, very important for the bottom line of these companies. For example, Apple has hundreds of billions of dollars of cash. They're making a return on that cash just sitting in their inventory, in their accounts. And interest also has a big role in terms of prices of goods and services and everything as well. So with interest increasing higher than expected, the Fed is going to have to either pause or decrease hikes. And both of those things are bullish for the stock prices. If CPI data comes in better than expected, then the Fed can continue to increase hikes. And if the Fed continues to increase hikes, then that means that stocks are going to fall. The stock market prices of these different companies is going to fall because as the Fed increases the rates, right? Companies are going to have to pay more money. So if the Fed increases rates by 0.5%, for example, like you guys have seen in the news, oh, wow, they increased it by 0.25 basis points. The Fed increased rates by 0.25 basis points. What that means is companies have to pay 0.25% more for everything, basically. And that is bearish for the stock market. If they don't increase rate hikes, then it's good for the stock market, in my opinion. And that, I think, is going to start permeating in this. It's going to be really interesting to see what happens, because this meeting is going to be very, very important for it's going to set the tone for the rest of the year, in my opinion. And I'm excited to see what ends up happening here. Regardless, heading into Wednesday, Tuesday night, we're not holding anything. If we do, it's going to be a lotto play. But that is the main important first piece of news for this week. And the next most important news is going to come on Friday. So the other important news that's happening on a Friday is triple witching. So obviously it's not as bad as quad witching, but triple witching is different types of contracts expire on that day. So option contracts, index options, and index futures all expire on Friday. So what ends up happening is it doesn't automatically mean that after this day, the market either falls or the market either rises. What I've seen happen is the market starts to be a bit more trendy, not in the days following, but in the weeks following. It starts to be a bit more trendy. So that is the next thing. Basically, like, we're going to see a solidification over the week afterward of a pretty decent trend. That's what I'm assuming is going to end up happening. So yeah, this week is going to be very, very important with CPI data and then triple witching. All right. Now let's take a look at the charts and have some fun. We're going to take a look at the McClellan oscillators. They're showing some pretty interesting signs. And then I'm going to show you guys, the indices. And what I want to look at on the indices is on a daily time frame. I'm going to compare what would happen on a 1 minute, on a shorter term time frame in terms of day trading. And I really, really think that is going to end up happening for the overall trend of the market. All right, so I'm going to give you guys my whole thought process. All right, let's go ahead and look at that. All right, so this is stockcharts.com. Basically, to get this chart, just type in NYMO. This is the McClellan oscillator, and just go down here. And you don't need any other moving average. All you need is the 8 exponential moving average, and just set that, and you're good to go. So what we're looking at is whenever the oscillator either becomes red, then it's bearish. If it becomes black, then it's bullish. So the NYMO works pretty well. So right now you could see that it flipped bullish. And right now, right? So just looking at this, I'm not going to comment on anything else. The NYMO is saying that this is bullish on the stock market and things should bounce. Okay? Very, very simply, the NYMO is showing bullishness. That's what I just want to show you guys. Now we're going to take a look at the NYSI. And the NYSI is also, it does a good job showing bullishness and bearishness. But the NYSI is still bearish. Okay, so there's a discrepancy in terms of that. But on the shorter term, the NYMO is showing bullishness, while the overarching momentum that you can see on the NYSI is still showing bearishness. Okay, that's all I want to take a look at for this. Now we're going to take a look at the indices. So we were taking a look at everything layer by layer. We looked at the macroeconomic news for this week. Then we looked at the indicators and what direction basically the indicators were showing. Now we have to take a look at the indices, the dollar, and the bonds. All right, so very, very simply right now on the S&P 500, this daily chart is very bearish. This should never, on a 1 minute time frame, this rarely ever breaks back above this high. Okay, rarely ever does that. The thing that I'm basically expecting right now, so I'm gonna shift through a few charts quick. Okay, so this is the chart of the SPY, right? And at the moment, the SPY and the NASDAQ have a pretty similar chart. Okay, so we're looking at the SPY and the NASDAQ. They're both creating a bit of a bear flag. Cool, understandable. That's fine. Now, what is basically going to end up happening is now the market is just bouncing for a better opportunity for a short, in my opinion. Whether that short comes over here to 448, 447, well, it's 448, 47 over here, or it could gap up above 450. Regardless, this setup almost never breaks higher than this point until it breaks lower once again. So the only times that it breaks above this high is it would need to make another low. So that means it would need to break below 443 again. It would need to break below September 7th's low. Okay, so at the moment, in my opinion, the market is just bouncing for an opportunity to get enough strength once more to break it lower again. On a daily time frame, by no means is this bullish. This is not a bullish setup at all. This is a really this is showing a lot of bearish momentum. Okay, it's very, very clear that the market is showing bearish momentum. This entire time since we gapped up in July, this is bearish momentum. We bounced, we came to this level here, we failed it. So now we're going to come back, in my opinion, we're going to come back to another level of resistance, fail that, and make another low. That's what I'm assuming is going to end up happening. So this is going to end up happening on both the SPY. So this is where the interesting part starts. So it's going to happen, in my opinion, on both the SPY and the NASDAQ. Both of them should be making newer lows. We can continue bouncing a bit higher, That's fine. But both of them should continue. We're going to see how high they bounce, but then they should both make newer lows. But now the interesting thing is when you're looking at the IWM. The IWM is a setup where this is a really, really, like, if this was happening on the SPY on a 1 minute time frame, this setup, right? This is obviously still bearish momentum, right? Obviously looks still bearish. If on Monday, in my opinion, if on Monday we end up, for some reason, we end up really, really selling off and the IWM makes a completely new low, I'm going long on the IWM for a bounce. And so here's the thing. The IWM actually looks the most bullish out of the SPY and on the NASDAQ. Out of the three, the IWM is the most beaten down. It's showing the most weakness. And the weakness, in my opinion, on the IWM cannot sustain itself like this. So when you're day trading, it's very, very important to have multiple screens that you're watching at the same time. And it's not like, oh, you know, I'm just looking at a bunch of screens. The importance of it is because you want to see, okay, if the SPY is at a level of support, and if the NASDAQ is at a level of support, and if the IWM, if everything is at a level of support, and for example, like if you have another chart open, if Apple, Microsoft, big movers in the market, trillion-dollar companies are showing bullishness, the indices are at support, that's a bullish sign, okay? Now, what is interesting here is if the IWM makes a new low, that is not a good opportunity to go short. What people are looking for is levels of resistance to go short. So the IWM is already breaking below levels of support. If it breaks again afterward, then it's going to cause retail to become very bearish. And as we know, they do not want retail to be on the right side of the trade. So if the IWM ends up breaking lower and the SPY and the NASDAQ are still showing some strength here, that would be a really, really good buying opportunity. Because if the IWM, if, for example, the IWM has a really, really big red day, and if the SPY and the NASDAQ either are holding this support, or if it makes a new low as well, then that could all set up for a big move to the upside. And that move would be able to break this high. So right now, so on a daily, on a 1 minute time frame, down here, you would go into, so I'm talking in terms of day trading now. So if this setup were to show up on a 1 minute time frame, you would go light. You would buy light. You would have to go light because you would have to assume that this move cannot sustain itself and there should be a bit of a bounce. And you're either playing light to the long side, knowing that it's going to make another low, or you're playing light to the long side, basically playing as if like, okay, even if it does break above 448, 450, I can sell there, or I can hold if for some odd reason it continues higher. But regardless, my point is that you have to go long there, and for a very light position, because the reason why it's light, and we've already understood you have to go long here, and it's light. The reason for that is because the momentum is bearish. So you go light here. If this fails and makes another low, this is where you average in. And now you have a higher average at a much stronger level of support. And then down here, after it makes a new low on a 1 minute time frame, when people are scalping, after it makes a new low, when the original people that went heavy, the people that went long here heavy, they are underwater at this point. After the market falls, that's when you average down and you buy in again, because the original people that bought in with a stop loss here, they're stopped out and they're like, oh my God, I have to play to the short side now. I'm going to go short. That is, I think, what could end up happening. And honestly, that is usually what ends up that's usually what always ends up happening on a 1 minute time frame. The only thing that is the issue here is that there's CPI data coming out on Wednesday. Otherwise, this would always end up happening. And but yeah, regardless, I really like if we end up getting a break to 437 to 438. That would be a really good opportunity if it happens quick. That would be a good opportunity to go long and for a pretty explosive move to the upside, in my opinion. That'd be pretty nice, because at that point a lot of people would be bearish, and basically that would coincide with the IWM being very overextended. It would be at this very important level of support down here at 182. The NASDAQ would also break down lower, and it would come down, and it's just nice. So the IWM is starting to look a bit overextended to the downside. One more big move on the IWM to the downside would set up the SPY and the NASDAQ for a bounce as well. And also the dollar is very important to watch as well, because the dollar has an inverse relationship to the market. If the dollar starts to show weakness here and it starts to break down lower, then that's obviously bullish for the market because it has an inverse relationship. So right now, to summarize everything, right now, the market is obviously bearish momentum. You had to go light long, which is what we did. We went long at 443. Now it's just a matter of how high this is going to bounce, and it should not break above this high until we make another low. So if we end up making another high, then we're going to average into shorts. If we aren't already short, right, we're going to get short as it breaks high, because that would be a really juicy short, in my opinion. And that's what ends up happening on a 1 minute shorter term time frame as well. And yeah, honestly, that's what ends up happening. So we'll see how this all plays out. The only issue is that there's CPI data coming out on Wednesday, but hopefully all of this stuff plays out before or after CPI data. And it'd be great, honestly, if this stuff does play out the way that it you know, like regardless of news, honestly, sometimes regardless of news, what's interesting is like a lot of important news ends up happening at like very important technical times. For example, you know, I don't want to get too conspiracy theory here, but market makers are basically like there's hundreds of billions and trillions of dollars in the market, okay? And Bitcoin obviously is not as large of a market, so it's easier for people to manipulate it. So there has been times when Bitcoin was at perfect technical setups for a breakout, and Elon would, I think, deliberately release some news that would help push Bitcoin above. And it would only happen at like really opportune moments in terms of technical setups, because everyone knows that there are algorithms in place to adhere and to respond to certain things happening in the market. So in this instance, regardless of whether the news happens or not, I think the algorithms regardless would still buy up 437 to 438. The market would just need to be really bad. Something would need to happen for this not to work out the way that I'm saying it. And yeah, like another instance of basically this exact setup of how it would be a better short would be, for example, back here. So back here in the middle of June. So this is a very similar setup to what we see right now. Extreme weakness. It started to bottom out. Obviously, it's not showing as much strength, but it started to bottom out, and then it didn't make another bounce before I even continue. So obviously this is bearish, right? And this is a bearish setup, and it started to try to create a bottom. It only came and tried to retest this top after it made new lows. And then down here Similar to what I was just showing, this would be the equivalent of the SPY at 438. Down here is when it made a new low, when going long would have been the best, and then it retested and broke above that. And then once we made new highs from here, again, it was a better opportunity to go short all the way after we had this bounce up. And if you were shorting this entire time, 2-3 months out, what ended up happening, as you guys know, is it really capitulated. So that is a similar situation that we have right now, and I would be surprised if we don't get this bounce up from these levels here. Similar to the setup that we have down here, I would be surprised if we fall down here and we don't get a bounce. So that is basically my thought process. It turns out that way often on the 1 minute time frame when I'm day trading, and yeah, we're just applying the same mechanisms to the larger term time frames. Things do seem pretty good for all of this to happen. The only issue is Apple's weakness. So we really need to see how Apple plays out. Also, this week, I forgot to mention, is Apple is releasing their iPhone 15. So we might see a run up with Apple, and that'll help actually make a more bullish case for the market. So yeah, that basically explains my thought process for this stuff. And yeah, I'm excited to see how this plays out. So yeah, this is pretty interesting. Apple has the event on Tuesday, December 12th. So they release basically they're going to release news about the iPhone 15. So this is it's gonna be fun. But that is basically my thought process. Overall, we should make another low before we break above 455. But basically before we make before we break back above the highs here at 453.67. But once we make that low, then that is a much better opportunity to go long. And all of this time, basically, we should at least hit 448, 447, 448, depending on how much strength or weakness is in the market. Then once we get up here, you can start scaling into some shorts for an eventual breakdown below. That is basically the thought process for everything. And yeah, I'm excited to see some weakness out of the IWM for some bounce back, elastic stretch back in the market. So I'm excited. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning live stream. All right, take care. Have a good one. Love you guys.